Hello and good afternoon, everyone. Welcome to Shufti's most recent webinar, where today we are going to be discussing the new AML regulations, and it isn't just a compliance project, it's an identity decision. So we're going to be looking with our esteemed panelists today about how everyone can look at developing a framework around what the AML regulations are putting in place, building a defensible journey across eIDs, wallets, and documentation verification. So without further ado, I would like first to introduce our panelists. First and foremost, if I may go round to the table very quickly and ask each of you to quickly introduce yourselves. First, we have Clemens Brunner, Dr. Clemens Brunner, who is the co-founder of Sproof.
Yeah, hello, thanks to be here. So it's really nice to talk about this topic. My name is Clemens Brunner. As you said, I'm co-founder of Sproof. We are running a digital signature platform, including identity verifications.
Wonderful. Thank you so much for joining us today. And next we have Andrei Shibny. Andrei is the CEO and co-founder of the AML Certification Center. Andrei, would you like to say a quick few words?
Hello, everyone. Thank you for inviting me to the webinar. My name is Andrei, correctly pronounced Sribny. Sorry, it's a hard Eastern European surname. No worries. And I lead AML Certification Center. We have trained over 5,000 professionals in anti-financial crime and law enforcement. And we're also recently selected by the European Agency of Law Enforcement Training to develop a new diploma course on financial investigations. So we are trying to connect to build this bridge between compliance professionals and law enforcement, which I think is very important.
Absolutely. Public-private partnerships, that is the way forward. Thank you, Andrei. And next we have Sarah Adenaki, and I hope I pronounced your name correctly, Sarah, who's an award-winning compliance professional and best-selling author. So, Sarah, please tell us more.
Hi, everyone. Thanks for joining the webinar. I'm Sarah Adenaki, and I currently work as a leading financial crime compliance head for a global investment bank. And I'm really looking forward to contributing to this conversation. And yes, I did write a book quite a while ago about things university doesn't teach you, because I feel there's so much to learn in the real world that we don't get taught. So thank you for having me on here.
Wonderful, Sarah. Thank you so much for joining us. And last but not least, we have the wonderful Nelly Mikub. I still don't know if I pronounced your surname correctly, but I love it. Who is a product marketing manager, senior product marketing manager with Shufti. So, Nelly, would you like to quickly introduce yourself?
Yes, sure. My name is Nelly Swamngube. As Una has already alluded, I am a senior product marketing manager here at Shufti. My role is obviously to lead our global go-to-markets across all our B2B regulated markets. I have over 15 years of experience in the rich tech and financial services industry, including fintech. And my background really spans between organizations such as TransUnion as well as LexisNexis. So very happy to be here and looking forward to contributing into the conversation from a Shufti side.
Amazing. Thank you so much, Nelly. So without further ado, just to kind of set the scene, you know, the new AML regulations are really representing a fundamental shift in Europe's approach to financial crime regulation. And what we mean by that is that unlike the existing AML directives, we are now creating a single rule book that directly applies across Europe, and which is also going to be supported by the new AMLA, the Anti-Money Laundering Authority, which was introduced on the 1st of July last year. The AMLA regulations are going to be applicable from the 10th of July 2027. Some people say that sounds quite far away. Well, I think as you get to my age, that will come around very quickly. We're basically looking here at less than, in real terms, 10 months to be ready for that. And what is also challenging there is that there's going to be a lot of additional scope of additional entities which are going to be brought under the AML regulations within Europe over the coming years, which is again going to expand the application of the rulebook. Many firms, however, are approaching this exercise as a gap analysis, kind of a policy update, a staff training exercise. And I would stress at the outset of this webinar, and something that you're going to hear repeated again and again, that is not necessarily going to be sufficient. This is, for all intentional purposes, a real review of your effectiveness of your framework. And that doesn't start with a policy. That starts with a real fundamental understanding of the inherent risk in your book. What does that mean in respect of your clients, your geographic exposure, products, services, third-party exposure, and how have you mitigated those gaps to create effective controls that are actually working in practice? And you could argue that in essence, your policy is just cherry on top of the cake in the end, because fundamentally what the regulators are going to be looking at is, this is wonderful, you have a policy, you have procedures, but do they work? So again, going back to what I said at the beginning there, do not approach this as a gap analysis, which is what we have done historically. And that is why this really requires a game-changing approach. So the strategic question is therefore no longer simply, are we performing verification in terms of our discussion today around ID verification? It rather is the ID verification that you're currently having in place robust enough, scalable, and capable of meeting the new evidential expectations? And would it survive regulatory scrutiny? So on that note, we are going to jump into our questions. So first and foremost, we're going to bring Andre in. I'm not going to even attempt his surname now. And he's going to help us to unpack the RTS burden shift and what that really means for firms using remote verification today. And, we're very familiar with, the shift in the burden under RTS, where a firm is using remote verification solutions other than, electronic IDS routes. What do they need to demonstrate? What is going to be the reference point in the shift? And where you don't have the available or cannot be expected to put in place the required standards, what are going to be the scope and the breadth of the exceptions that are going to be permissible and potentially defensible to regulators? So first and foremost, we are going to speak to Andre. And Andre, if I may bring you in on this first question. The CDD RTS asks firms using a remote verification solution to show that it meets the applicable safeguards. In plain terms, how big a shift is that from firms and how they're onboarding today versus the expectation for tomorrow?
Thank you. Thank you very much, Ona, for asking me this question. And I'm going to talk about the regulation and this practical shift from a position of a training organization. What matters here, because we see the regulation and its applicability from different angles, from the regulatory angle, as we discuss it with regulators, from the financial institutions angle who actually apply it. And also as a training provider, we should stay compliant with all these shifts and upcoming technical standards that are going to become regulations itself. So the shift itself, and actually before I answer this question, if I may, one precision, because the vocabulary matters today. The RTS we're discussing is final in substance, but it's not yet law, because AMLR consulted from February to May, as you may know. The final draft went to the Commission in July, so it's in the Commission, and it binds on adoption. So nothing tonight is the rule is in force yet. The rule is set, and the time to prepare is now. So this is what we are doing here on this webinar, I believe. And asking the question about the shift in the burden. The shift is structural and deliberate. Let me prove this from the drafting history of this standard rather than just saying something. During the first EBA consultation, the industry pushed back on this draft standard. Firms argued they should not be forced toward the eIDAS routes if other methods met the guidelines. The EBA accepted this, accepted the point was reasonable, and then said something very important. It could not add that flexibility because of the regulation itself, because Article 22 of the regulation itself refers to the eIDAS measures for verifying identity. So broader flexibility would mean amending the regulation itself, the primary law, which is very complicated. And AMLA also took this position of the EBA. So this is not a supervisory preference that lobbying will soften. The industry asked, the answer was no, and the reason was the level 1 text of the regulation. So this is the shift we have. And what changes in practice is that today you choose a verification method and the regulator checks your policy, right? And from July 2027, if your method is not an eIDAS route, you carry the evidential load. So you will have to prove that your method is compliant, is sufficient. You demonstrate the safeguards, you demonstrate the data protection compliance, and you keep the file that proves it as well. So this is a documentation burden as well.
And I think one of the questions we get quite often as well is this genuinely a new standard, or does it formalize good practice that stronger firms are already following? And some of the discussions I've heard in the industry is that really the standard of good practice is not fundamentally new in this regulation. What is new is the breadth, consistency, and enforceability of the expectations and the reduction in the ability of firms to outsource their judgment to a technology provider. Of course, we're all familiar that we cannot outsource these obligations. But what would you say to firms that do actually ask the question, is there going to be a fundamental change to what I do today? What would specifically should they be focusing on to understand the extent of the implications for their organization?
Well, answering the question whether it's a new standard or it's a formalized good practice, I would say that it's both, but the order matters here. The safeguards themselves largely formalize what the EBA's 2022 remote onboarding guidelines already expected. So like liveliness detection, capture quality, etc. A well-run firm will recognize most of that checklist, right? But what's genuinely new is who carries the proof right now. And we know it's deliberate from the drafting history. So during the consultation, industry, again, as I mentioned, argued firms shouldn't be forced toward the eIDAS route if other methods met the bar. And the answer was no, and the reason given that the flexibility is constrained with the level 1 text. AMLA kept that position. So what died was free choice, basically. Other methods as equal options. What survived is a conditional exception. You can still use them where an eIDAS route is not available or cannot reasonably be expected for some client groups like non-EU citizens and etc. or residents. So if you prove the safeguards, you can do it. It's an exception, not an option. So this is the answer. So
Perfect,
it's both.
Thank you. And so very black and white. And so, Andre, if I may then just kind of picking up on that, the rules obviously prioritize the use of an electronic identification, authentication and trust service, electronic identification method for customers, so an eIDAS. But firms are allowed to use other remote verification methods when a compliance solution is not available or cannot reasonably be expected. Where do you think regulators are going to draw the line on the scope of this, and how should firms document that exception? And because it's a very broad, where does the line in the sand stop?
Yeah, great and fantastic practical question, Ona. Thank you. The answer is, at the edges, we already know a third country national with no European Union electronic ID not available. That's a fact, not judgment. So it's reasonable here. A domestic customer holding a high assurance electronic identification, your market fully supports. No excuse. The undefined territory is, I think, the middle. Does cost count? Does conversion friction count? Does low adoption count? There, honestly, nobody knows, and I would not trust anyone who claims to. What a firm can do is not predict the middle, but document its position in it, because what is knowable is what a defensible position looks like, right? When a supervisor asks. So there are three layers, basically. First, dated evidence that you assessed the eIDAS routes for that specific customer journey, not in general. And for that journey, that member state, that customer segment, etc. Documented evidence. And second, the specific reason none of them was workable. Coverage in that member state, the customer population, and the channel. And everything written down and ready to show to the regulator. And the third, I think that evidence that your alternative method meets the safeguards. And here the draft is concrete: real-time liveness detection, high-quality data capture, etc., and independent evidence.
And I think one of the biggest...
trap...
So go ahead,
yeah,
Andre.
The trap in this question is the phrase "in the meantime." A firm documenting its reasoning now is building the file as it goes. And a firm waiting for supervisory guidance will be restructuring that file during an inspection.
Yeah.
So same work, much worse to do it.
Yeah, and I think, Sarah, bringing this to a practical kind of perspective, obviously, if we look at the availability of electronic IDs globally, we're looking at around kind of 45% of countries across the world having electronic ID. But similar to previous challenges that we've seen, in particular, let's compare it to kind of corporate registries. It's not one size fits all in terms of reliability, assurance, or legal status. So where are the challenges going to be for organizations practically when they have obtained, the electronic ID, but how are they going to base the assessment on which ones they can actually place reliability on without further documentation? Oh, Sarah, I think you're on mute. Oh, Sarah, I think you're on mute. Sorry.
Sorry, can you just repeat that? I thought that was meant for Andrea. Sorry.
No. It's basically taking this from a regulatory perspective to kind of governance perspective, kind of, BAU. Obviously, we've seen the challenges if we take a corporate registries where we can't place the same reliance across the globe on different corporate registries because of how information has been gathered. Same applies even if we look at exchanges, where we've actually had to base, for onboarding customers, simplified due diligence, recognized exchanges. Obviously now electronic IDs, we're going to enter a similar challenge with, well, which countries of the 45% of countries around the world that have electronic IDs, which countries will we base will we be happy and comfortable with accepting that ID, or where we will actually require additional verification methods? Is this something which is going to be required for the board to approve, and is that going to be a policy decision for organizations?
So I think when it comes to the verification of information, you can look at it at different angles. Obviously, they're expecting like a tiered system. So a lower tiered for obviously lower risk customers up onto a medium, high risk. So in terms of what is being approved, I would say the starting point is kind of look at your current process, because to improve anything, you have to look at what you currently have. So in some instances, depending on the size of the institution, it might require a certain level of board approval getting involved, but in some places, it might just be the compliance lead that might need to approve certain things. But I think ultimately, somebody needs to be in charge of it. Number one, someone needs to take ownership of who is responsible for those approvals. Number two, it has to be a tiered system. So when you have a standards threshold, for example, you could set up verification triggers automatically, identify, improve, source of funds, and all of that. But when you start to go over the 1,000 euros threshold, then you start to come into the higher risk, EDD, full enhanced due diligence, source of wealth, ongoing monitoring, senior sign off. So I think ultimately every tier produces the same thing in terms of the evidence trail, in terms of the relevant approvals. But what you do determines on the level of risk you're looking at, whether low, whether medium, or whether high.
Do you think that and I know, Sarah, this is probably just a new question. Apologies, we haven't discussed this before. Do you think that organizations are going to have like policy decisions in place similar to what we had with exchanges, where, for simplified due diligence, we will accept these as recognized exchanges? Do you think we'll have that in respective countries for electronic ID? Do you think that's potentially a move that we will see?
I think it's debatable, depending on how you're looking at it. I think as AMLR evolves, decisions would need to be made. Policy updates should not be the first thing that people are thinking about. I think it's more of a process examination. What do we have? What is working? What is not working? How can we evidence it? What is the trail that we have to, to evidence to the regulator if the need arises? So for me, I won't give a strict, go this way or go that way answer.
Yeah.
I think over time, as it evolves, we'll be in a better position to see what works. But policy definitely won't be the first point of call. That's probably the last. When you kind of know where you are, then you start to think of your policy updates.
I couldn't agree with you more. I think it's going to be very challenging as well.
Yeah.
It's going to be very, very challenging. It's definitely going to, and especially people who are unfamiliar with certain jurisdictions, certain countries, we're going to end up with those challenges. So thank you, Sarah, for your very clear honesty on that one, because that is actually how it's going to happen. So if I may then move over, bringing in both Clemens and Nelly into the discussion. Obviously, kind of the wallets only roll out from kind of late 2026, and coverage varies by member state. How do you reconcile the direction of travel toward electronic IDAS with the fact that the wallets for EUDIs aren't uniformly available yet?
Yes, so
Cool.
Go
should
ahead,
I start?
Clemens. Yes,
Okay.
Please go ahead.
Perfect. Yeah. So the thing with the wallet is that the wallet is basically an electronic ID, unified across the EU and all the 27 member states. It's like a digital app, where you have your electronic ID stored, which can be used across border. But at the moment, we can say it's not uniformly available yet. It's completely not available at the moment, because it will be available at the beginning of 2027. But as we know, in practice, it should be mandatory that each member state should have a wallet at the beginning of 27. But the thing is that it will not be at this date. So it will be a fragmented market in a kind of transition period for the next, let's say, 12 months, I guess, where all the member states will start with providing a wallet. And also, it's not only the wallet itself, it's also onboarding the users to the wallet. So it will take some time. And I think during this transition phase, we need to have alternative methods where the users can choose between using the wallet or using the existing electronic ID or using any IDV provider. So I think that will be the fact what we have with the rollout of the wallet, that we don't have the full availability from date 0.
And Nelly, if I may bring you in on that, should firms wait for kind of universal coverage, and or try and build their entire future model around the limitations?
So, an answer to your first question, whether firms should actually wait, no. I don't believe that firms should be waiting. And I will talk about kind of the approach that we've taken from a Shufti perspective, understanding, as Clement has already spoken about, the fact that none of these EUDI wallets are currently available. So what we are doing is we are building what we are calling hybrid flows. And these hybrid flows are flows that are going to be built in a way that when the wallet eventually does become available, it will just be plugged as an additional flow to what has already been built. So we all know that national IDs in certain EU countries already exist. And some of them have been categorized as being able to sit under the substantial or high level of assurance mark. We also know that there is the whole NFC chip process that is also available. And then we also know that there is obviously the bread and butter that today we all sit with, which is the document capture as well as the biometric liveness. And when all of these really do not reach the level that you need them to, there's also the qualified trust services that is still very much legally recognized, because it issues a qualified certificate where identity verification is equivalent to someone meeting a person in the room. So when that proofing almost happened and that session happens and the certificate is issued by a qualified QTS, then you are able to still bring another route into your current panel. So basically, every route ends, with the same, a verified identity, some form of AML screening, and a dossier recording the method that was used and what assurance level that it carried. So we cannot sit, especially for us as IDV vendors, and say we are waiting until all of these are rolled out. When they are rolled out, we're going to see what the adoption curve looks like, et cetera, et cetera. So that's the way that we have really started to work out our infrastructure as well as our architecture. And what we've also done is we've made sure that we've kept things in modular in terms of the way that we put things together and build, because we know that by keeping them like that, we will then be able to plug whatever comes in instead of us having to do a totally new build or start all over again. And I really think this has been an effective strategy for us, because we're not waiting until something happens. We are building, we are signing assurance levels, we are making sure that we're also tapping into what we know to be legally acceptable, while we wait to get ourselves to the place that we need to when the EUDI wallets come into play.
And I love that, Nelly, thank you very much for kind of getting to the place where we need to be, because that kind of very nicely segues us into the next kind of question, which I hope you won't mind, Andre, if I direct towards you. Kind of to Nelly's point there, kind of around standardizing the outcome versus creating I don't want to say patchwork, but kind of independent solutions as we're adapting. What should be the direction? Are we looking to create one identical customer journey, or for companies that are operating across, let's say, all European countries, is there an expectation that they're now going to have to develop 27 independent country solutions? Andre, what do you think here is going to be the harmonization challenge in this?
Well, the direction of this travel is literally one standard. The whole idea of the regulations, the regulatory package, and instead of one directive or multiple directives, and one directly applicable rule book, one supervisor in AMLA and the national exceptions that fragmented anti-money laundering for almost a decade, they are removed. And the honest answer for the transition, 2027 and 2028 are the so-called, as you mentioned, patchwork's last stand. Wallet availability differs by member state. National electronic ID notification levels also differ. So the practical route to a single standard today runs through the methods that already work everywhere. And I'll say one thing as an Estonian. We have run daily life on electronic IDs for more than 20 years. And the lesson is not that the technology is hard, it's that trust in the scheme is built by using it. So the country starting now shouldn't wait for perfect coverage before building journeys around it.
Yeah.
And my advice to a multi-state firm in one sentence might be build one journey to the highest common standard and document per country exceptions. That's it.
I have to say, in my experience and having lived across the globe and also worked in various countries, one of the most incredible digital identity regimes I've seen is actually Kazakhstan. Absolutely phenomenal. You can even pull up the deeds of your house on it. It's pretty phenomenal. So very quickly then, Andre and Nelly, if you mind, both to you, a quick one-liner. For a board that doesn't follow the RTS detail, how would you describe what has changed in a single sentence? So to your board says, like, what is it that's changed? How would you say that in one sentence? And Andre, if you could go first, that would be great.
Yeah, so my sentence would be that until now, you chose a verification method and regulators checked your policy. From July 2027, you justified the method itself. And if it isn't an eIDAS route, as I've already mentioned previously, the burden of proof is yours. So this is what board should know.
Yeah. Okay, perfect.
I feel like my statement was also going to be very similar to what my colleague had said. But I'd also mentioned, under the draft standards, government-backed electronic identity verification becomes the reference method for onboarding a remote customer. And if you use an alternative, such as a video, if you use a doc or selfie, you have to then be able to record that, write it down as a body of evidence as to why eIDs weren't available to you. So very close to what my colleague has said, to say the burden of evidence lies with you. And this is where everything is moving, which is the eIDAS first direction.
And Nelly, just kind of moving on from that, do you think that a lot of the conversation that I'm hearing in the market at the moment, it kind of presents the new regulation as a product readiness exercise? Update the solution, map the safeguards, obtain certifications, and then tell the clients that we are, AMLR ready. Those things matter, but they only address part of the problem. I don't think that the industry as a whole has fully absorbed the scale of the change.
100%. I think what I'll do is, I don't want to speak too much in terms of how other vendors have translated or processed this change, but I think it would be worthwhile for me to almost paint the picture of how we've approached this from a Shufti perspective. So back in 2023 already, Shufti as a business launched our first electronic identity solution called eIDV. The launch of this product was really driven by a couple of influences and things that we're seeing in terms of trends. The first, obviously, was we were seeing an evolution in the identity verification industry. And we were also listening to our customers and what they were saying to us. A lot of the customers were coming to us about issues when it comes to making onboarding easier. They wanted to lower customer abandonment rate, and we therefore started building something that we could see other governments were starting to move towards. Fast forward, obviously, to when AMLR was adopted in 2024, and a lot of some of the internal hypotheses that we already had as an organization were confirmed. So the basic answer is, just by kind of sharing this story around Shufti, you already see that the journey that we started long before, and it was a journey that was not a product feature-led journey. It was not a journey that was led from the compliance team. It was really a journey that was led from an organization's commitment to being able to offer customers what we call assurance level graded selection or choices. So my view is that any IDV vendor in the market currently that is looking at AMLR as just a product feature, or just a compliance project, or just an update or a policy change, then that is an IDV vendor that has probably not been on the journey of listening more to their customers, and also just being more aware of what's happening in the industry that they are at. So the levels of involvement when it comes to a project like this are, across all multi-stakeholders, etc. But more importantly, this shouldn't be something that feels like a total shock to all of us, because we have been seeing the trends, the evolution, the changes. As you've just said, Kazakhstan has got the best kind of electronic or remote identification offering. So all those things have already existed. It's just that now there might be a feeling of, panic or slight panic and thought process. But if you've been in the industry and you've been looking at what's been happening, this shouldn't be something that is making you feel like, kind of your world has dropped to your feet, to be honest.
Well, I'm just conscious, and thank you so much for that. I'm conscious of time as well, so I'm going to quickly kind of move on to the next discussion. But I actually think that you made a very polite statement there when you said that organizations have chosen existing controls, including tech, to give reassurance to customers. I actually think that in many instances they've been chosen on the back of regulatory or audit findings, or indeed because there was an update in regulation that enforced the requirement to have it in place. And what we've ended up with in many organizations is KYC tech stacks that are operating in silos for document verification, liveness detection, screening, and so on, which all individually do what they say on the tin, but they don't speak to one another, which also ultimately creates an absolute a significant data challenge for AI adoption as organizations want to increase sophistication. This risk obviously is very much highlighted in the expectations of the AML regulations. And I think it would be amiss if we didn't actually pick that up as a discussion point very quickly for organizations. Do you think that regulators are going to step in now, in particular, the entities that are going to be under the oversight of AMLA? And AMLA will ask the question, explain to me how the overall control is working across your products, across your organization, and evidence the reliability of the complete verification journey, not just the assurance reports from each supplier. I know that this is something that you guys have looked at, but this is a real industry issue at the moment.
Yeah, so Una, I think a really important question, because it is a question around this multi-vendor usage, and in the move to AMLR and the requirements for this defensible evidence, what happens to stacks that are not really one seamless stack and actually is a compartment of different components all put into one. So I think it's an important discussion for us to have. For me, the first thing is that we all can acknowledge that multi-vendor usage in terms of AMLR is not something that has been frowned upon. In fact, outsourcing has been explicitly permitted under the framework. So I just want to kind of give reassurance to individuals that are working with multi-vendor stacks that you're not going to be all of a sudden non-compliant because of that. I think what's really important is that while AMLR explicitly permits outsourcing, what they do is that they tell you that you cannot outsource accountability. So yes, you can outsource the work, but ultimately when the rubber hits the road, you are the one that's in the front line explaining everything. And so, as Shufti, we've always taken a more of a build approach, and we've taken that approach for many reasons. But I just want to run you guys through like a quick scenario of what we could potentially be facing with more and more individuals wanting to go the multi-vendor stream. So just imagine you get your eIDAS remote identity verification from one provider, the liveness is done by another, the actual screening happens on another, and then you have another provider that provides the trust services. There you sit with 4 separate contracts, with 4 separate retention policies in some cases, and 4 different forms of evidence. And now imagine 3 years after you've been using your Stitch solution to be able to determine all of this, and you get a regulator in your door and they say, we've got an inquiry about this specific customer file, please can you bring the evidence to us? What happens there is that it changes the conversation completely. What should have just been a regulatory inquiry becomes a project within the organization, because we need to now go to all these individual people, try and stitch it together and make sure that everything was running in the way that it needed to, but also the format of evidence also needs to make sense. So I think we don't farm against multi-vendor approach, but I think we need to do it from the point of designing single chains. And I think the Sproof EverTrust as well as Shufti relationship that we recently announced, or the partnership that we recently came together on, is like a very good example of that. From the word go, we wanted to design a single chain. We weren't going to just stitch it together and everyone does their own thing. We brought it all together into one so that we were able to know what roles each person plays, but also more importantly, know what comes out as the piece of end evidence when we are questioned about the decisions that are made. And so also that resulted in having one retention policy. So I think there's a way that we can look about multi-vendor usage, but definitely one of the best ones is to start your design from like a chain perspective instead of designing to accumulate. So designing to just stitch and bolt on and build, etc.
Yeah. So Sarah, if I may bring you in on that from a practical perspective, one of the things that I constantly, remind people is we talked about this already earlier, about it's not just about a policy, it's about effectiveness. And obviously that's where, especially with FATF, within the current, round 5 mutual evaluations, the focus is on not on the framework effectiveness. To what Nelly is saying there with regards to the system and the flow, in many instances, especially for more sophisticated organizations, this should be something that was already done, that natural flow of the workflow of onboarding customers and also understanding the interconnectivity of the different vendors and providers. So Sarah, in your view, this shouldn't be something that's going to be challenging for larger, more sophisticated organizations, but potentially for, I wouldn't say less mature, but potentially for other organizations who have moved away from a kind of a one plug and play solution and now exploring additional tools. So what would your view be on the market there, Sarah? Oh, you're still on mute. Oh, there you go.
Can you hear me now? Yeah. I think large organizations struggle will probably be around the legacy and coordination. In terms of the system and the flow, I believe that the work is a lot harder because it means untangling the verification you currently have within your process for your old core systems across possibly multiple businesses, jurisdictions, probably even vendors, technical, buildable, but also slow but political. And sometimes this could be very expensive for them to change, covering the breadth they would have to cover. But when you look at probably smaller organization and newly in scope sectors, I think the struggle will probably be around resource and expertise, not a legacy issue at all. They often have a clean slate technically. So I think sometimes they might be in a better position as long as they have the budget to kind of back up what they're doing. I think they will probably be in a better position. In terms of the compliance depth, I think it might be limited. Engineering capacity might be limited. Producing the system in line with the deadline we're working towards would probably be having to run against time. So those are some of the challenges that I personally foresee happening, both for larger and smaller organizations.
Perfect response. Honestly, I totally agree with you. Those legacy issues, they will continue to be the biggest challenge for bigger organizations. And also their slower ability to respond to change, given the size and the speed of the organizations. So Nelly, then just back to you quickly. Sarah, thank you for that. Obviously, and Andre stressed this, and he was absolutely correct in his point that these rules aren't yet finalized. Obviously, we don't expect there to be a significant deviation following the approval of the final set of regulation. But we're not looking to future-proof a product against rules that haven't yet been finalized. But obviously, organizations need to make it change ready. So what should they expect from their providers of their current systems in terms of transparency and kind of build and version control, etc.? What should the buyer be asking? What should the clients be looking for from those providers, from the vendors?
Okay, perfect. Thank you for that question. And I think for me, it's a case of, it's a lot easier for buyers to go out there and start asking the questions to vendors, to potential providers, etc., etc. But there's fundamental questions that the vendors or the buyers themselves need to ask themselves before they move into that. And those are, questions around what would happen to their current active customer risk tiers if they had to place them under AMLA models. Would they suddenly see a customer that they had marked as maybe a low risk move to medium, or a medium moving into high? There's also been a very deliberate mention around what are the mandatory listed attributes in terms of entity as well as natural persons. Now, we know a lot of the organizations that we're dealing with are people that have been in business for many years, and they've acquired a lot of customer data. But have they taken the time to look at their customer data to make sure that the data that they have at least covers those mandatory listed attributes? And the other one is probably a lot more of a trickier one, because if you also are an international entity, there is a part where you have to sit and be able to say, how have I mapped AMLR and its impact to my compliance flow? So I think sometimes, the buyers focus a lot on going to vendors and saying to them, can you do this? Can you do this? How long can you do this for? And whatever the case might be. But there's a lot of other own groundwork that they need to do before they start posing those questions. And some of the questions that I definitely think they should be posing to vendors is, things like, how do you evidence your assurance levels? How fast can you adapt to a change in the standard? And maybe all of them can tell you in a day or two. But also questions like, how is your whole stack put together? Are there certain critical pieces that do not sit with you, and therefore we need to be aware that that's where they sit, etc. But I think when it comes to these kind of initiatives and changes, I think reflection starting with yourself before going out is a lot more helpful and saves you a tremendous amount of time, because you can work with what you know and currently have, even before you can start asking someone that's outside of your own organization for questions.
Absolutely. And Clemens, you want to come in on that?
Of course, yeah. So I also think that it will be a huge chance and decision how firms will act with the IDV approach versus the EUDI Wallet approach, and how they do the digital onboarding. So also for us as an digital signature player at the beginning, we also decided to do now also the identity verifications. And if you compare the classical way how it is done, we're using IDVs, where you need to do a video agent-based approach, or where you just need to make a photo of an ID card and make a copy of it. This process is very hard and error-prone, and it also takes lots of time. And in comparison, using existing electronic IDs like the EUDI Wallet or eIDAS, it's just something what you can do within seconds. It's just an authentication flow where you authenticate yourself and provide your identity. And this is very easy to do, but it only works for established electronic IDs. And this is also what we do at Sproof. We also built an kind of identity verification layer, but we do it based on electronic IDs only. And so we will be also certified according to ETSI as an identity proving service provider in the future. And we can also do this just based on existing electronic IDs.
Yeah. And I think it's fair, after kind of 25 years in the industry, I can finally call myself a veteran. I think I've got to that point. And I think one of the things that just kind of stands the test of time is transparency. You know, we're not looking for all the vendors to be AMLR ready today, because the rules are currently fluid. But what we need to know is, what have you built? What remains uncertain? And exactly how will you close the gap when the final standard changes? And so I think that's a very, very kind of fair and transparent expectation from customers, from buyers in the market. But to the kind of will this make identity verification vendors obsolete? To your point there, Clemens, absolutely not. It rather will be not about the accuracy of the verification of the passport, but rather, what is the value that you provide when the customer arrives without an actual, electronic identity? How can we then verify that? And how can we then evidence the basis upon which that is actually being done effectively? And I think this is going to open a lot of very interesting discussions with regulators when we see future inspections coming. So Clemens, would you like to add anything to that?
No, I'm fine for this at the moment. So I think.
Okay, perfect. And again, just conscious of time, I think we've already covered a number of the other discussion points that were raised. And please, to all of our listeners, feel free to ask any questions that you want. We'll move on to, if you don't mind, Clemens, we're going to move on now to QAS and chain of custody fit. So just to get everybody kind of to where they need to be to start the discussion, what is a QAS and where does it sit within the broader identification and trust framework?
Yeah, so to clarify this question, so QAS is a qualified electronic signature, and it's regulated under eIDAS trust framework, what we already talked about a lot. The qualified electronic signature is the highest standard of signatures what the European Union defined, and it's always based on an identification proving before. So you need to provide your identification on a very strong level, so it's the level of assurance high, and this is done to a trust service provider, a qualified trust service provider, QTSP, and those QTSP can then issue a qualified electronic signature when you do another identification using a second factor with your phone, for example. And then you have a legally binding signature on a document, which is equivalent to the handwritten signature in front of court. And this is the same regulation across all 27 member states. And the QAS therefore is the world's highest electronic signature what we have, because it's always based on the highest electronic identification before.
Fantastic. Now, do you want to add to that? No, you're on mute, sorry.
No, I think he's definitely touched on all the key points. Nothing to add from my side.
Fantastic. So, Clemens, if I may then ask you on that, where does the EUDI wallet, God, honestly, I am getting acronym central here today. I thought living in Singapore for 6 years, you have a 3-letter acronym for every single thing. But the I think we're all going to need an acronym Wikipedia on our desks going forward. So where does the EUDI wallet fit today? And we talked about this earlier. You know, is it going to be available on the 1st of January 2027?
Mm-hmm. Yeah, so the EUDI wallet is like an electronic ID, and eID, but it's the successor of the eID from the eIDAS 1.2 regulation. Now we have the eIDAS 2.0 regulation, which defines the EUDI wallet. And the EUDI wallet is more or less a holder for an electronic ID. So it's like an app what you can install on your phone, like a Google Wallet, Apple Wallet, but you can get issued on those wallets your electronic ID represented as a PID. And this PID is similar to the electronic ID, but the difference is it is defined to be also used for all processes what we have cross-border across the European Union, so also for the private sector, not only for the public sector. And the EUDI wallet is planned to be there in all member states at the beginning of January. But at the moment, this is, as I told before, not realistic that all member states would have one wallet. And on this side, we have two things. The first thing is the technical infrastructure, which needs to be built. For example, here Germany is very far, and they do lots of marketing activities around this. But other countries do not even have defined the company who builds the wallet itself. So, and now we have August, so it should be there in January, so that's not realistic. Yeah. And on the other hand, to make this as a successful project, we also need, as Andrew said, the acceptance of the users itself. So we need the people using this system, be familiar with the electronic IDs, like to use it. And for example, here in Austria, we have more than 5 million people onboarded already on the ID Austria, it's the electronic ID. And the EUDI wallet will just replace this. But we have the processes in place on a daily basis, what the people can use, how they interact with the electronic ID. And for the Austrian people or for the Estonian people, it's just a switch from this app to the another app, but the use cases are there. But for example, in countries like Germany, it's completely new. They maybe have the infrastructure ready, but not the people to onboard it to an number that it will be relevant for a daily use. So I think to be realistic, it will take, I think, more than 1 year to be the rollout finished on all the countries, and that you can use it on a daily basis.
A very, very different context, but I think this could be comparable to the travel rule in terms of adoption, where yes, it's legally binding. Yes, countries should have it in place, but we have interoperability with technology. And, you know, is there going to be enforcement around it? That's going to be the big question is, yes, this is the deadline for adoption, but is adoption versus enforcement versus expectations all going to be harmonized as one? And the answer very clearly is it cannot be that way, because we're all going through different stages of the journey in order to achieve this. So I think in my words, I think that implementing this deadline as an adoption deadline has been very, should I say, utopian. And I think that we should have allowed a grandfathering phase over a couple of years in order for people to get to the same level. And then we should have had a hard deadline at that point. I think that would have made strategically a lot more sense. But at the same time, that then will go in the face of harmonization, which is obviously what we're trying to achieve here. So apologies, I'm segueing, but we've seen it in many other instances, and we've seen where it has failed and the practical, and we have to be practical. You know, regulation is only workable when it actually can be effective and practical in reality. So, but when you're dealing with 27 member states, again, that's also another challenge. Okay, so we've discussed that. I'd like to then move on to kind of reusable identity and QES. They're getting a lot of airtime. Where do they actually earn their place in an AMLR compliant flow? And I don't know if Clemens, if you'd like to pick that up first.
Yeah, of course. Yeah, so reusable identity and QES is one of the most important things where we also focus on the company of Sproof, where we build systems and then use cases around those things. And to be clear here, to reuse a QES, or let's go one step back. So you need an identity to create your qualified electronic signature. And you go to a trust service provider, and there you prove your identity. And then if you want to reuse it, they can create for you a user account, which you can use to authorize your qualified electronic signatures, and then you can reuse the identity. But the qualified electronic signature providers are only allowed to use your identity to issue a qualified electronic signature, which means that the output will always be a QES. And if you want to reuse your identity, you need to re-identify yourself again, because the thing is that the qualified trust service providers are not allowed to provide your full identity, like what you need for AML onboarding, like a unique number, ID, residence, things. And in the QS, on the other side, only the first name and last name is stored. And if you reuse your QS and you wanted your full onboarding, it's maybe too less, because it's only is attached to the first name and last name. And maybe we have lots of duplicates around the world having the same name.
Yeah, absolutely.
And what we do at Sproof is that we will be, as said, identity proving service provider, where we use electronic IDs in the first place, where we can take all the data out of this for a full identification. And then we just use this data also to issue a qualified electronic signature in the backend, which gives to them both. And then we don't reuse the QS, reuse the identity, and issue just as much QS as you need.
Yeah, wonderful. Thank you for that, Clemens. And I think that brings kind of the question around, where are we going to be come 2027 in respect of, when we go live, what are we expecting to see as a default kind of cross-border onboarding? The quick answer from what everybody has said is we are not going to have harmonization at that point. There is going to be, I don't like to use the word again, but there is going to be somewhat of a patchwork approach. And also organizations are going to need to develop the approach which best suits their business model and their risk. So, what works for one may not work for another. And rather, this will come back to explainability and transparency when the regulator comes in, evidence how this route and how the flow works in respect of your control framework, and shows compliance with the expectations of the regulations. I think that's probably the quick answer. I'm not sure if you would agree or disagree. Andre, Sarah, Nelly, Clemens, please feel free to jump in on that.
So I totally agree on the question. But even though if we assume that we have a unified solution in the EU with the EUDI Wallet, the EUDI Wallet, this only covers 5.5% of the world's population. So we have still 49.5% left where we need to find alternatives, where we need to have a separate solution in place. And there are also lots of countries which do not have an electronic ID at the moment. So I think it will be still no unified default by 2017.
Oh, yeah, totally. I think we got kind of similar stats. My stat was kind of like 45%. There's only 45% of countries, so 89 countries around the world which currently have electronic ID. And of those 89, the discussion obviously we had earlier was they're not comparable in terms of standards. and how they've actually authenticated the data. So we are going to have challenges. But Sarah made the really valuable point earlier to that, is that some of this is going to be, and again, I'm putting words here in Sarah's mouth, through trial and error. We're going to identify challenges as we move through this, and it may not serve in our best interests from the outset to try and set perimeters and standards for certain jurisdictions and countries. We've always used kind of geographic risk ratings based on available indexes, whether it's corruption index, sanction regimes, all of these different kind of publicly available data. But how do we benchmark electronic identity regimes across the globe, and what information do we actually have that's not public at our disposal to assess the effectiveness of the documentation verification? That's going to be a bigger challenge. And then to Andre's point earlier, kind of public-private partnerships, that's what's going to be critical here. It's there is going to have to be an element of honesty with certain countries that they need to improve the standards involved in their electronic ID adoption and rollout. But again, we're going to cross those bridges when we come to it. So we're going to quickly then move over here. We talked about, I introduced travel rule briefly, just as an example of where a deadline for adoption doesn't always mean that things will be in place. And Sarah, we're going to obviously speak here to gaming, betting, payment service providers, and crypto. For firms coming, I wouldn't even say from a lighter regime, certain regulators across Europe, Germany in particular, if you want a crypto license, you have to meet the same standards as you would do if you wanted to obtain a banking license. But other jurisdictions have had slightly lighter requirements. In the UK, for example, although no longer part of Europe, but we saw, they had an AML regime, which technically was quite broad, but again, they're not the same level of standards, but it was from an AML perspective, the same standard. For firms coming from gaming, betting, PSP, crypto sectors, what is going to be the hardest part of starting once AMLA then obviously moves forward, once we have the regulation in place and it fully into scope, and in particular, some of those entities that are going to actually be directly covered by AMLA. Sorry, I'm thinking of two things here at once. What's going to be the hardest part for these entities of complying with the regulation? And secondly, for those that are directly under the scope of AMLA's supervision, do you think it's going to be more challenging for them?
Okay, so I would like to, thanks for the question. I'd like to address it in this way. I think for me, the first thing is the fact that there's no legacy infrastructure. When you look at the traditional kind of like banks, they've been obliged entities for decades. So they have experience with having to absorb a lot of regulatory requirements. And so they're technically going to be upgrading the existing control, if you like. But when you look at the betting and gaming and sort of crypto industry, they're still in that process of kind of building the entire evidentiary architecture from zero to production scale. And guess what? They have the same deadline as everyone else. So that tells you what will be required in practice. And also, I think from an AMLA perspective, you look at kind of the highest risk customer base by design. So when you think of crypto, you look at rapid fund movements. When you think of like things like self-hosted wallets, cross-border flows, anonymity as well is quite high in that sector. Adjacent products, but it basically puts them very close to typologies that AMLA targets. So the bar for the EDD threshold, kind of like the travel route data capture, applies harder more often than even your typical, retail bank because of the risk associated within that framework. And you look at things like, the volume forces kind of automation to carry the full weight. So in this instance, there's kind of no manual fallback at this scale. The verification method has to be both the primary product experience and obviously the audit trail. So it's not just about doing it right, it's being able to evidence what you've done. And when you get it wrong, it's not going to be a compliance gap, it's going to be a business breaking one. So I think it's very important that if you're an entity that falls within that category, kind of be ready to rock and roll. It's not about how big or how long, it's about ensuring that you're compliant with what's coming ahead. So yeah.
And I think one of the things we've seen enforcement action taken against some crypto entities, I won't name names, where they haven't adopted or improved existing kind of KYC frameworks and CDD frameworks in order to support the development and the sophistication, and in fact, improving sophistication of the business model and the services they've provided. So this really is a real eye-opener for many of these entities who, even when they obtained their licenses, were quite small and starting out. They've moved forward, and the question now is you're going to have to evidence the effectiveness of your framework based on your risks today. And have those risks evolved since you obtained your approval? And again, can you explain it? And in some instances, and I think this is fair to say, there are lesser mature compliance departments at play here, where they haven't necessarily either had to build these entire frameworks from the ground up previously, or indeed understanding really what the changes are coming through and what that means for them. But you did make the point earlier, which I still concur with, that these firms, because they're built from a tech perspective, they actually are much better placed to move forward with tech modification. Their data should be much fresher, much cleaner. They don't have the issue that you mentioned of legacy systems. But yeah, I think I think this is going to be, again, a country by country. Clemens talked earlier, obviously, about the standards and digital identity and the EU wallets, Germany versus Estonia. This is going to be one of those situations as well. I think German operating betting, gaming, PSP crypto firms are not going to have the same challenge in terms of, moving to the AML regulations, as we would see some other lesser regulated states for those entities, lighter regulated regimes at this date. But MiCA should have forced through a lot of fundamental changes. But again, none of that has been assessed yet or looked at. And again, we're playing with a field that is currently up in the air. Like we're juggling, everything is moving around us. And then they wonder why compliance officers get stressed or indeed get paid a lot of money to do what we do.
Off the back of what you said, I think it's kind of relatable because we're constantly playing catch up. The rules are constantly changing, the regulations are constantly changing. So organizations also have to be prepared for a world of change as far as regulation requirements are concerned. So I think it's that constant, having to evolve, having to adapt, having to kind of change your rules, your processes. It's an ongoing piece, if you like.
Yeah. And I would be amiss here if I didn't take this opportunity to mention the fact that culturally organizations need to understand where the accountability for this sits. This is not the job of the compliance department. This is the responsibility holistically of the risk owners within the organization, and that goes right up to the board. So I made a joke there about compliance, but I would like to point out the fact that this is really importantly a situation where the board needs to take full accountability of where they're moving to, because unfortunately, and we've seen this in many instances with regulatory changes, this ends up just once again on the table of compliance to fix or remediate, should I say. So on to the next question, timeframes. Obviously, we've talked earlier about the hard deadline being the 10th of July, 2027, and that's the date that firms must be operational. Again, that's not the date that they should start. What's going to be the big challenge here for these organizations? Like what are they expecting to have in place by that date?
So you mean in terms of like practical steps?
Yes, in terms of, system integration, customer remediation, board approval, all of this needs to be ready by the 10th of July.
Yeah. So I'll say the first thing from my perspective is kind of map out your current verification process in tiers. So identify where it's flat in terms of the same for all clients versus where you already have that step up in terms of the gap, and then build your list, not your policy first, because a lot of people are very big on, let's update the policy. So I need to emphasize that in this instance, you're going to have to carry out a practical approach to be able to get you ready, because the timeline is very closed. The second thing I would recommend is probably track AMLR's technical standards as they publish things, the detailed CDD procedures, reports and formats, the risk factor guidelines that kind of define the actual obligations. They're landing throughout the whole year. So I think building against the draft standards and now rather than waiting till later. Another thing you could do as an organization is pressure test whether your system can produce an evidence trail. So it's okay to say you've onboarded a client, you've carried out the verification and the identification, but can you actually in real time produce an audit trail, pull a sample, for example, of onboarding decision, ask how did we do this, when did we do it, what data did we rely on, and essentially see how you can close that gap. And like I said earlier as well, assign a named senior person to be in charge of it. As like you said, it's not really a compliance role anymore. You need someone to take ownership, to take accountability, and basically be AMLA ready, if you like. Someone that will be at a very senior level, coordinating sort of like the product engineering, putting it all together, fixing where the gaps are, and eventually sort of updating the policy as well. And I think sequence the build around your high risk first is a lot harder when you're trying to, evidence kind of like EDD. You know what I mean? It's a lot more information required to evidence that you've onboarded them the right way, verify their identity. So I would say start with your high risk, the hardest part first, and then work your way down rather than starting with the easiest part first and then struggling to catch up. So that would be my recommendation.
Amazing, thank you. I'm not sure that we really need to kind of go into explaining the difference between AMLA and national regulators. I think at this point, I think we're quite a good, because of given time, and I'm conscious that we've gone over very, very quickly. If there's any questions, guys, please put them into the chat room or raise your hand and we'll be happy to answer them. But just to kind of go into the last flow of today, just a quick round table to each panel member. We're not even we're 10 months out here, if we're perfectly honest with ourselves. What is going to separate those that are ready from those that are not? And I wouldn't even sectoralize this because we, again, have a lot of disparity within sectors. But what is going to be game changers for organizations that will be ready, or at least have the outward appearance of being ready on the 10th of July? And Sarah, if I may start with you.
Absolutely. So I think for me they've stopped waiting for the final text. They're actually building against AMLA's draft standards, as they're published throughout the year, not exactly waiting for the finished rule book, if you like. The second thing I would suggest is obviously they treat the timelines as separate tracks. So, the final law, the technical standards, the transitional guidance, the national rules that move at different speeds. So ensuring that the ready sectors don't collapse. Because don't forget, you would probably have some, country-specific standards as well that you still have to continue to adhere to. And I'll say they would have their named senior ownership by then. So not a compliance memo, but basically someone who is accountable for the coordination of the process to ensure they can meet the relevant timeline. Thank you.
Brilliant. Thank you. And Clemens, to you.
Yeah, I can just add on this to say that the companies need to react now to be front running in this space. And we as Proof, we offer solutions for doing exactly this. So we will also be happy to assist here to provide identification verification services based on the eIDAS regulations. To have this in place, and you can test it now. And I think that's also what's the most important thing is to be active in the space and not passive. So react now, then you will be front running. Accept your
Brilliant. Thank you so much, Clemens. And Nelly, to you.
Yes, sure. I think in all the discussions that I have heard today, the one line that's kind of stuck in my mind is that, identity verification is the first door. And actually, we're now moving to a time where the maintenance, the defensible evidence, the ability to be able to really have a customer due diligence file is something that's becoming more and more important. So pass or fails, we're moving from that and we're moving more to audit and defensible evidence.
Brilliant. Thank you. And last but not least, Andre, to yourself.
Thank you. Separating those that are ready or will be ready and those that are not, I think we can mention three things. The first one is, of course, what they are preparing against. Ready firms treat the technical standards as the so-called exam paper. The burden ship, the safeguards, everything that we've discussed today. None of that is visible in the regulation. So firms doing gap analysis against AMLR alone are preparing for the wrong exam. And they won't find it out before the inspection. Second, whether the decisions exist on paper and the documentation culture, it's a more complicated process than just writing policies. I mean, you can do it with artificial intelligence like in today's. And third, whether they have counted their people. Ready firms know exactly who falls inside the articles, if I'm not mistaken, 12 and 13 of the AMLR, including agents and distributors, and what evidence of training and competence exists per person as well. So not ready firms are about to discover their compliance perimeter is 3 times larger than their compliance team.
Brilliant. Thank you so much for that. Nelly, you wanted to add anything there?
No, I was just surprised by the statement you made at the end.
No, it's true. And, on that note, I think, AML regulation readiness is ultimately about being able to prove that every identity, every decision, and every control can be trusted, and that the framework works when it matters and how it should. And that really is how simple it is in practice. And if we're completely honest, most of it probably should already be happening. So the great news is nobody really has anything to worry about. We're all good for the 10th of July next year. Everybody's good to go. But the reality of it is that we're not. And that comes back to the effectiveness regime and why we really need to fully understand how our control frameworks work in reality and remove the silos in our operating procedures. So on that note, I would really love, again, we've overran and I'm terribly sorry about that. It's terrible moderating from my part today. I would really love to thank Nelly, Sarah, Clemens and Andre for all of their really valuable input today. We really hope that this webinar has been useful. We obviously will be publishing some follow-up responses. Any questions that have been asked that we haven't responded to yet, we will get back to you afterwards, but we will publish obviously some follow-up thought leadership from today. There's a lot to take away. There's a lot of work to be done. If you've any questions for any of our panelists, feel free to reach out to them individually via LinkedIn or indeed contact Shufti and you'll be able to provide their details. But on that note, thank you to our panelists. Thank you to all of our attendees, and I wish you a wonderful day ahead.
Thank you, Una.
Thank you.
Thank you so much as
Thank
well.
you.
Thanks to the audience. Thanks, everyone. Bye.
Thank you.